let's move on. And the next management on board is Syngene. But then before we start understanding the results from them, let's just get the results on board for you. Revenue is at 910 crores versus 891 crores. So it's upsurge of almost 2.1% on year-on-year basis. If we look at the net profit, it's almost 67.1 crores. That's down 36.8% year-on-year basis. And even EBITDA, if we look at, that's down almost 18% to 199 crores. And all right, we're also joined by Mr. Peter Bains, MD and CEO Syngene International. Good morning and welcome to the show. What will be the revenue guidance for FY26 if you look at the numbers now? Any changes in the guidance out there, and what factors will be at play for that, especially with respect to US biotech funding environment?
We are maintaining our full year guidance on revenue, which is mid-single digit. And that's on the basis of the second quarter and the first half, where we have seen 2% revenue growth on the second quarter comparatively, and 4% growth sequentially. And in the first half, we've seen a 6% growth. And that growth is a reflection of sustained momentum in our underlying research services business, which has more than offset an inventory adjustment that we're working through with a large biologics customer. So we're pleased with that performance. It's as we anticipated and consistent with our full year guidance. With regard to the US biotech funding, what we are seeing is an improvement in the fund flows in VCs into biotechs, which I think portends well for Syngene, and we would look at that to add in a tailwind on top of the underlying growth momentum that we're already seeing. So on the basis of that, we're maintaining our full year guidance.
All right, that's good to note. Peter, hi. Morning, this is Shrishti also joining in, but that brings me to my next question. The revenue growth guidance has been maintained, but will you stick to your margin guidance of mid-20s? Because this time around, this was close to 21%. It's a drop on a sequential basis as well. One, what factors impacted the margins? And second question, of course, will you stick to your guidance?
Yes, we are sticking. We're holding to guidance on revenue, EBITDA, and on PAT. On the EBITDA, what we've seen, we've seen a reduction in EBITDA in quarter two, and that is a reflection of the inventory adjustment that I spoke about, but also our continued investment in operations, in people, and in some of our operational areas. For example, in the fast-growing new modality areas where we're continuing to expand our operations in areas like peptides and antibody drug conjugates. But for Syngene, we normally see, the second half being stronger than the first half. And again, building on, the positive growth that we've seen in the first half, we're holding to our guidance for the full year on EBITDA margin as well.
What will be the CapEx guidance for FY26, and how do you plan to spend that?
CapEx investments, I think will be allocated in large part to building capabilities in research services. And there, particularly, I think what we're looking to do is build on our existing strengths in the fast-growing new modality areas of peptides and antibody drug conjugates, and we'll continue to invest there. The balance of our CapEx will go into, the CDMO arena, where we're building out, obviously, in the Bayview facility in the United States, looking forward to bringing that into operations in the second half of the year. And we'll continue to, I think, accelerate our investment in digital throughout our organization. So CapEx will fund, really, I think, very important areas of fast growth in new modalities, underpin the capacities that we have that we're looking now to fill going forward, and to strengthen our digital infrastructure.
All right, but just to follow up there, if you can quantify the allocation of CAPEX?
Yeah, it's roughly sort of 50 to 60% in research, 30% in CDMO, and 20% in others, and that's focused on digital improvements.
One last question: how do you see the newer facilities contributing in FY26?
So we're very pleased that in this quarter we've seen commercialization activities commence in our Bangalore biologics facility, where we're now supplying GMP clinical material, and we'll be looking to see that business grow. In the Bayview facility in the United States, we're making progress very much on track to get operational in the second half of this year there in the preparation and the revalidation. And in Mangalore, we've seen some encouraging signs there, of business coming in. We're a little bit behind on where we wanted to be in Mangalore, but the trend lines that we're seeing are positive now.
All right, Peter, with this, we let you go. So good having you on the channel today. Thank you so much for your time. Looking forward to a stronger H2, like you just highlighted. So that was the management of Syngene International talking to us about the performance expected going ahead, sticks to the guidance, while the H2 is expected to be better. But time now to slip into a very short break. Lots more lined up on the other side.